When it comes to capital raising, once you've had a successful raise, everything changes. The standard changes, right? People don't necessarily tell you that out loud, but you're going to feel it. On your first deal, perhaps investors were more patient with you, right? They expected a few rough edges. They didn't mind the learning curve that you were going through. They gave you some room to breathe. But after you've had a successful deal, you've built a bit of a track record, that breathing room shrinks, right? Now they assume that your structure is tighter. They assume that you're going to have better sequencing. They assume that you've solved all the problems that they kind of had to look past the last time. So if those start to crop back up in the second round, things start to feel a bit unclear, not necessarily because the deal's worse, they may change up on you because their expectations of you are higher. I've seen sponsors repeat those same behaviors that were initially tolerated the first time round. I'm talking about things like, sloppy document flow, loose explanations, unclear use of funds when the exits are. But on the second raise, they're not tolerated anymore. That breathing room's gone. You get a ton of friction from investors. And like I said, even if the deal's better, what's happened is the perception of you has changed, right? They expect you to be better. They expect you to have progressed. Time has passed, right? You need to be more organized. And so if that's what the investor's going to expect from you, you should build for that. Tighten everything up. Go to a level that is beyond what you think is necessary. Your offer needs to be super compelling and fit the market's appetite for risk, yes, but your investment structure needs to be super solid. You've got to have everything covered from every angle possible. Your marketing collateral needs to show that. Your project collateral and diligence needs to be top notch. Everything needs to be in black and white, because once you've had that success, the margin for that loose execution or the tolerance in general, that's just going to go. You need to make sure that you're building for the cautious investor every single time. Every deal is independent from the last.